Hi, welcome to this video. Date's the 19th of March. It's Tuesday. We're just going to be looking at what we consider to be a couple of high odds breakout trades, and they're going to be in Euro NZD, NZD JPY. We want to sell the NZD if we get the breakout triggered. Now, in terms of the Kiwi, it is, in our view, the most overbought major currency of all. We've had quite a bit of success in recent YouTube videos in terms of buying the GBP on the NZD, some really decent profits. And I'm hoping that these two trade setups will also give us some good profits. Now, in terms of our view, the Kiwi is most overbought major. It's backed up by our favourite tool in Forex trading, the COT Net Traders Positions. If you are unfamiliar with this tool, you can click beneath this video and watch an explanatory video of why we consider it such a fantastic tool. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Now, what we are going to do is we're going to go and look at the trade setups, but please do keep in mind, is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Now, what we're going to do, just before we look at the trade setups and draw our levels, we're just going to look at the COT Net Traders positions. Very quick look at the COT Net Traders positions. This is the spreadsheet from our site. Now, in terms of, like I was saying in the intro, what we want to do is see big divergence between speculators, big speculators, that's non-commercials, and smart money commercial hedgers. So we'll go with the commercials, okay? Now, on this spreadsheet, it's free data, it comes from CFTC. We work it out as a divergence in terms of, what the non-commercials have got as a ratio, longs over shorts, and the commercials the same. We do it as a ratio, okay? I'll explain that in a little bit more detail as I do my examples. But in terms of this week's spreadsheet, it's the NZD that the commercials are really selling, okay? It's the standout currency on the report. And in terms of Euro NZD, non-commercial speculators 2.8 to 1 in terms of shorts over longs, commercials 2.4 to 1 in terms of longs over shorts. That gives us a divergence of 5.2, okay, between the two groups. It's not the biggest divergence. It's big historically, and I really like the look of the technical setup. So we're covering this one today. GBP NZD. Non-commercial speculators 3.5 to 1 shorts over longs. Commercials 2.6 to 1 longs over shorts. So bullish of the GBP on the Kiwi. Slightly bigger divergence at 6.1. We've done really well out of this pair, trading long the British pound, okay? We're not covering it obviously today. We're covering one of these three pairs here. We've got NZD CAD, NZD CHF and NZD JPY. These are up near the 10 level, which we normally really like in terms of using the COT, okay? NZD CAD is 7.5, CHF 8.4. I've picked out the yen as a trade setup to do today at 7.9. Why have I picked that over the Swiss? It's just a more volatile pair, okay? But you can see that the non-commercial speculators 4.9 to 1 longs over shorts. Commercials 3 to 1 shorts over longs. That's quite a big divergence in this pair. And we're going with the commercials. This spreadsheet, anyone can get the data and compile a spreadsheet. And we just find it so useful here. So COT Net Traders Positions, I think anyone should learn about. Great tool. Obviously, there's a video beneath this one to learn more info. What we're going to do now is go and look at the trade setups. I'm actually going to start with NZD JPY. On the NZD JPY daily chart, and just in terms of these notes up and across the top, obviously we've got big event tomorrow. It's the Federal Reserve. They're meeting to decide the outlook for US interest rates. they're expected to be dovish and cautious by the market. That is discounted by speculators, okay? So it's in the price. The most vulnerable currency to an expected Fed, i.e. being dovish, or if they're slightly hawkish, which we think they might be, is the NZD. Okay, you can see that. I mean, that's our view, but obviously you can see that on the COT net traders positions as well. Once you know the COT net traders positions, it makes technical analysis pretty simple. What we've got here, you can see it over the last few days, tight sideways action, volatility very low. You can see that the way the Bollinger Bands have contracted here. Low volatility points normally to a big move, and obviously we expect the Kiwi to sell off. Now, in terms of resistance, that is the key level at 77. That is where the commercials will continue to sell. Okay, that's a key hedging level. And you're just kind of stalling below it. If it went up to the level or through it, we could always reset our entry, but we're just stalling. Just in very low volatility. We've got 20-day moving average there, another round number, 76. Okay. What you would do, or what we're going to do, just sell through the round number. Get clear of round number turbulence, which we say in frequently videos about 30 pips. So coming through 75.70, stop 77.30, and then look for her to run. Where's she going to go? The way those positions are in terms of how far the commercials and speculators are apart, 74 is easily on the cards, but I'm looking for the run on at least down to here, and I'm actually looking longer term for weekly, those two bodies, looking for a move down to weekly support. So on this one here, you got a really good risk reward. It's 3-to-1 plus. Yeah, if she comes through here, you go short, stop back behind there. She flicks up, you miss the trade. Low volatility points to a big move tomorrow, and we're looking for a break down through 76. You know, obviously 20-day moving average there as well. Okay. Now, in terms of this pair, really like it. I'm doing Euro NZD in this video as well. Why both pairs? Why not just pick one? I mean, I really do like this one, but on the other hand, you've got the Euro NZD, which looks a really good technical setup as well. I can't decide which one is going to do the best, so I'm basically going to do both of these. And also I've got obviously GBP NZD open in the market and looking to add as well. Let's have a look at Euro NZD, because I think it looks an attractive trade setup. Right, we're on Euro NZD daily. Now, in terms of this pair, in the short term, I can't decide which is going to do the best. This is more of a swing trade for me. I've got a more of a conservative target that I have in NZD JPY. But I think these two pairs, doing them tomorrow with the Fed coming up, I think I'm not going to get the best, I'm not going to get the worst. I just think these two pairs balance each other. Now, in terms of what I really like about this trade setup is there is your support, okay? Now, in terms of when we dropped this support, commercials are ramped up buying. On both occasions it's come down, and they pushed it off the level. It's obviously just above the 164 level. Now, what we have is 4 very tiny candles sitting just below the 20-day moving average and below the round number of 166. Okay. So basically what I think is going to happen is, if we can take out 166.30, I just think we're going higher. Okay. At the moment, I've actually got a small position in this pair with a stop at 163.70. I mean at 175.20. But the real high odds, I'm early. The real high odds break is 166.30. That level gives way. Got low volatility. I'm expecting a good size rally, and I'm going to go for here, which is 71. Y71, that is derived basically from my reading of the COT size of divergence, not to do with the technicals. You can obviously manage it as it goes, but could be a really nice break to the upside. If we do break up through 166.30, I'll bring the stop up, okay? So rather than 163.70, it'll move up probably to 164.70. But this looks a really attractive risk reward as well. It's a 3-to-1. And I just think, yeah, if these breakouts do occur tomorrow, COT is on our side, hopefully. And we should see some really good moves to the upside. If we do break out, I'm looking for a good run. Yeah, so we should get immediate follow through. I think, yeah, tomorrow market is really building itself up for the Fed. You can see that it's just not in the two pairs we've looked at today, but volatility across the Forex markets has dropped. In most pairs, most people expect a dovish Fed, discounted. If it's as expected or the Fed is slightly more hawkish, which we believe, then our pairs should do well, i.e. selling the Kiwi. We shall see. Thank you very much for watching this video as usual. Take care. Have a good day.